Welcome to another episode of Kiss My Assets.
The transparency, the openness, the communication is more than you could expect. I'm sold.
Don't let the fact that you don't know something or don't know enough about something hold you back.
I knew I wanted to invest. What better way to invest than to invest in what I already know that I love, which is real estate.
It was initially the 12% return, but it quickly turned into the people.
Hello and welcome back to another episode of Kiss My Assets. My name is Bella and I'm from Investor Relations, and I have John here with me today. We're going to be giving an update on our 36th Street property. We have renovations going on there, but also a few exciting updates with our Reg D that just passed. This is something that allows out-of-state accredited investors to invest into our Arizona individual offerings, which is great news and really exciting for those that want to be a part of those individual projects rather than just our REIT. So getting into that, John, for those living out of state that may not know a lot about the key highlights of 36, can you explain where this property is located, what makes it stand out in that area for those investors or those potential investors?
So let me back up one more thing. We love Arizona. And it's a great market for us. And we have the opportunity to find probably more opportunities than most people to find projects, but it's very difficult to make sense of things right now. And what I mean by that is not a lot of product coming to market. Higher interest rates are making it harder to make sense out of things. Construction costs are going up. So we are constantly evaluating properties. And the reason why this one fit, to get back to your original question, was this is on 36th Street between the Indian School and Thomas Road corridors. And traditionally in Phoenix, that's been a lot of multifamily, small multifamily, well-located projects, well-built projects, but also between what I call the Phoenix restaurant corridor on Camelback and Indian School. And then there's a lot of retail along Thomas. So anybody who's been in the real estate business for a long time, this translates into a lot of housing that is needed to support those employees. These are employment generators. The Home Depots, the Walmarts, the restaurants, the hotels that are up the street, and this type of housing works perfectly. Venture on 36th Street is a well-built project, 2-story, block constructed, all the things I like about it. Concrete floors, not only first floor, of course, but second floor concrete. So it allows us to be a little bit more flexible on the type of flooring we can use. You don't have the sound. If you're using hard flooring, you don't hear it downstairs. A couple of good things about the project also. So it's mostly one bedrooms, not all one bedrooms. And why that's important, I just mentioned that you have a lot of service industry people working there. You don't have a lot of families necessarily in the neighborhood. Right. So what happens is one bedrooms are the most sought after property type or unit type in that area. So that property works really, really well for us. And we get strong rents, and rents up and down that neighborhood vary from probably a low of $1,200 on some unrenovated units to a high of $1,450 or so on renovated units. The thing that caught my attention, it was listed by a residential real estate broker who was kind of stumbling, I think, through the process of selling it. It was in contract with a client of ours from maybe a multifamily that was trying to buy it, but was stumbling to get debt in place because they didn't have the relationship with lenders. And we basically stepped into their shoes, took it over. And then the other thing that was interesting about it, an unfortunate situation, but the reason why they were selling, the gentleman who had owned the property did all these renovations to the property, new roof, new air conditioning, individual electrical systems, electrical boxes, and individual metering to the property, all these heavy lifting things, and then unfortunately passed away, and his 95-year-old mother inherited the property, and that's why they were selling. So we were able to step into an unfortunate situation that someone else had negotiated a great price on that wasn't able to close it, and then we stepped in and took advantage of it. Right. So those are the kind of opportunities you don't see very often, and we're taking advantage of them.
Yeah, and I think that's one thing that was touched on in the previous video about 36 was, even if the interest rates stay, we're still in a good spot. If they drop back down, whether it's a little or a lot, that just means more cash flow, which is great for investors. I know you talked about the whole 1-bedroom, 1-bath units and people needing places to rent over there. I think some good numbers to share are the current average versus what we plan after renovations, despite the big renovations being done. I think, as you or Jameson like to say, it just needs a little lip gloss or makeup added to
Lipstick
it.
and eyeshadow.
Lipstick and eyeshadow added to it.
It's a little bit above love that. It again, I think the past owner had bigger plans, and he took it from what was called a master metered property to individually metered. He put the roof on it. He did air conditioning units. All this stuff was permitted. He added more covered parking. And never had the chance to take it to the point where he's updating flooring, carpet,
insane.
cabinets, appliances, all the things that we like to do that we're
Right.
good at. And then because of our because we're efficient at that, we're able to do things like we're doing new front doors, new windows. And these are things that are going to make the property more attractive to renters.
Yeah, definitely. And those current average rents for those listening were $930 a month for 1-bedroom, 1-bath units. And then post renovation, we expect to bring those to $1,300 a month
Right.
for 1-bedroom, 1-bath. And then the 2-bedroom, 1-bath is currently about $1,000 per month. And then we plan to bring it to estimated $1,600 a month. So,
Yeah, and those are
yeah.
anybody knows Arizona, those are conservative numbers. Like I said, so they're getting they were getting about $900 a month on average for the 1-bedrooms in their current condition. With our renovation and better management, and then effective renovation of the exterior, also new signage, taking those up to the range what I see in that neighborhood. I said 1,200 to 1,400. 1,400 is probably closer to where we can go. The 1,200 are unrenovated older properties, generally some fourplexes and real small properties in the area.
Yeah. Wow. Great. Well, for the renovations that are needed, we have a designer that is going with a modern industrial type of design. You can look on our previous videos for that color palette, but it's beautiful. John, go ahead and share with us where we're at in that renovation phase and what's been taking place so far.
Well, we thank goodness we have a construction crew. So I want to point that out because talking to some of our contemporaries, I'm finding out that their costs for renovation in the last 2 years have gone up 100%. Ours have gone up because we're still paying more for paint. Can't believe how much paint costs nowadays. It's amazing how much that stuff's gone up. Appliances have gone up. Everything's gone up in cost. But we effectively took over the property and got our construction crew in there around the first or second week of August. And the reason I say that, we closed sooner than that. We own the property, but we have residents that were going month to month. We had some residents that were looking to get out of their leases. So we're able to get in some units. So we've repainted the entire exterior of the property, gone through, and I think we have 10 units right now that we were able to get into and then demo the insides. What that means is pull the cabinets off, flooring, vanities, things like that we're going to, and fixtures that we're going to replace, pull the appliances out. We're going to try to reuse as many appliances as we can. Not everyone's perfect, and not all of them matched up. We found out too. That was interesting. They look great when someone was living there. Then we start looking at them and we're going, oh, wait a minute, that doesn't match that. So a lot of that stuff's getting worked through, and now we're putting flooring back in those units. They're painted, new countertops. Cabinets are going in, and we're expecting to deliver our first 10 units to our property management company October 1st.
Wow. And for those that don't know, this building is 30 units.
Correct.
Yeah,
Yep.
30 units, shared courtyard, covered parking, pool, walkable area near, as we talked about, employment areas, nightlife, and it's technically, for those that are local, considered the Arcadia Light area.
Yeah, that's interesting. So
Yeah.
Arcadia is the kind of bubble in our town, very high-end ranch homes,
yes.
beautiful area,
Beautiful.
a lot of green. Arcadia Light feels a lot like that, but just the next price point down.
Yeah, definitely. And then back to more renovation talk. Has there been anything that's come up during the renovations that we didn't plan for, didn't necessarily
Always.
see being an issue?
Always.
Yeah.
Always. So, if you're building brand new ground up, you're starting with a blank palette when you're doing renovations, and we get into the first couple of units, we're learning more about the property, and we do a great job of understanding the property ahead of time, but you're getting in there, seeing things, how things fit, don't fit, where you can move things around. Probably the thing that we had to adjust our budget for a little bit, we didn't expect to replace as many appliances. Probably 50% of the appliances we're going to replace, they weren't in the condition we'd expect. And when you put a brand new set of cabinets and countertop in, and you slide the old stove in, that's speed up a little bit more than you think. It looks really, really bad. So
Wow.
we're doing about 50% of the appliances that we weren't expecting. We did have one budget trade out thing that our designer and our team was able to figure out how to accommodate. We already had windows we're going to redo, and there's a whole reason why we're doing that. We had single pane windows. We're putting nice double pane windows in, and we can do those cost effectively. The front doors were solid front doors, and generally a lot of our properties we like to put front doors that allow light transmission in, so it lightens up the room. And
Are those the doors with the windows in them?
Yes.
Oh,
So,
okay. Light
so
transmission. I've never
unfortunately,
heard
I
of that.
sent our designer a picture of something at a window store, and in the background were these beautiful doors that had 3 sets of glass
She's
windows
like, I
in it.
want those.
Very industrial, kind of cool looking. And then she was like, just, we have to get those doors. And I emailed her and said, you can have those doors, but you have to, they're $200 more than we thought. That are $200 more than we were going to spend on doors. So go for it. Figure out what else in the budget you can adjust.
Exactly.
So she went to work on figuring out how to get better pricing on other things in the budget.
Wow, that's awesome. Other than that, nothing huge that was like a big deal breaker.
Again, our issues are the same that everybody's dealing with. We're finding, we're going in and finding out paint costs a little more than we thought. Then we're putting one of our suppliers against the other one. Then our appliances have been pretty cost effective. I don't know why they haven't gone up as much as they should have gone up. And then once we get through our first batch of units, we figure out everything we have to do. When you pull the appliances out and you pull the cabinetry out and you go, okay, the plumbing wasn't done right back here. Somebody made repairs or drywall repairs that don't look good until you have a room that's empty now and you see there's no pictures on the wall and you go, it kind of does this on the wall. And we're like, just cut the whole section out. We'll just replace it. So there's things like that, but that's why we have what's called a contingency in our budget. We use about a 10 to 15% contingency right now. That allows us to have a little bit of float for things like that to come up.
Nice. Is it too early to tell if this is going to be a spot that's like really getting good tenants or if it's going to be getting troubled tenants?
Well, I can tell you, I think the current tenants we inherited, I don't think they were really the kind of tenants we're going to have in the future.
Okay.
And it really has to do with simply, I think they were barely able to afford the $900 a month. And this was a bargain for them in that neighborhood. And we've gone to each one of them and said, you can stay, but our rent's going to be closer to $1,400. And so far we have had very, very few takers. So at that $1,350 plus or minus rent for the 1 bedrooms, we're going to do very, very well with the kind of renovations we have. And what we're offering on the property, the pool. It doesn't have a real big courtyard experience, but that's okay. It is what it is for a property. And I think it's going to do very, very well with those rents. Most properties in the neighborhood are full and they stay occupied.
Great. Wow. Well, with this project, just to go over some of the returns for those that are listening and haven't checked it out online, this project is a 12% target preferred return with a $1,000 minimum investment, has a 3-year target hold period, and we have not closed this offering. So you still have the ability to invest in it, and we hope to wrap things up within, I would say, the next month or so. So if you do have any questions, make sure to reach out to Investor Relations. We're here to answer those questions if they haven't been answered throughout the content that we release on this. Moving forward, is there anything else that you want to share about the property?
I just say that we got lucky that we're able to find this.
Yeah.
We're at a very effective cost purchase price. I can't tell you how many of our existing investors who invest in this came to us and said, I don't understand how you got it for this price. We got lucky, and it's a little dicey out there. There's not a lot of product coming to market. So to find things like this, this is a home run for us.
Definitely. And we currently have 139 Arizona investors, a lot of returning investors that have invested with us before, and then 8 out-of-state accredited investor through the Reg D offering. So that's exciting news too. But as John said, this is unique, and it's great when you know the backstory about how we were able to acquire this property, which makes it really just make sense, as you said in the beginning. And it's exciting. So stay tuned. We just also released a video that shows these renovations that we've been talking about, so you guys can actually put a picture to the words that we're saying. So feel free to look on our site for that or on YouTube. But we thank you guys for watching, and feel free to reach out to us with any questions.